If you take a look at the level of US government debt, there's no denying that that is an insanely huge figure. But believe it or not, Congress does actually set a sort of limit on how much borrowing the government can do. This is known as the debt limit or debt ceiling. But what exactly is this? The debt ceiling is a limit on the US national debt. It basically caps the total amount of money the US government can borrow, and it was introduced so that Congress could keep the government fiscally responsible. But since the US government spends more money than it receives, its national debt is continually increasing, and after a certain amount of time, it reaches the debt ceiling. At this point, a solution needs to be found, which usually involves Congress coming to some sort of an agreement to increase the debt ceiling so the government can continue to borrow more money. Now, if the debt ceiling isn't lifted, this could result in the US government being unable to pay their bills, such as government employees, welfare payments, and even servicing their debt. Let's say they end up defaulting on existing debt, meaning they don't make their payments. That's going to have some serious consequences. Firstly, it will cause massive disruption to the global financial system, but it will also have huge implications on future borrowing for the US. I mean, let's put it this way. Imagine you lend money to someone and they don't pay you back when they're supposed to. What happens next time they want to borrow from you? Either you're going to flat out refuse, or they'll have to sweeten the deal significantly for you to agree. And the same applies to the US government. Their credit rating will suffer and their borrowing costs will rise, and this can have a negative impact on the economy. Fortunately though, the US has always paid its debts, and their bonds are therefore perceived as being among the safest assets in the world. When they've reached the debt limit in the past, they've just lifted it to avoid catastrophe, even if it takes politicians a very long time to iron out the details and agree to something. But although the US hasn't defaulted in the past, the markets will still experience uncertainty the closer we get to the deadline. Janet Yellen, the Treasury Secretary, has estimated that they can last until the 1st of June, although this is only a rough estimate. They can't give specific dates because government income and expenditure changes from day to day. So what are the different options that could play out from here? Technically, if the debt ceiling isn't raised, then the US government could default on Treasuries. However, there are a range of options available for Congress and the White House to avoid a default. Firstly, and probably most likely, Congress will just suspend the debt ceiling until they reach an agreement. It's not like this one is an unprecedented move. They've already done it 7 times since 2013. In fact, not long ago, they suspended the debt limit for almost 2 years, from August 2019 to July 2021. Doing that means the Treasury can go over the debt limit without having to worry about any defaults on debts, although this is only seen as a short-term solution because it does come with a deadline attached. Another common action that's been taken in the past is for the Treasury to resort to extraordinary measures. The Treasury is actually already in extraordinary measures right now as the debt limit was reached back in January, but this means the Treasury can borrow without going over the debt limit, but it may also include temporarily suspending some payments. These will usually be the less important things that won't cause havoc in the economy. Another option we've seen in the past is for Congress to pass a smaller increase in the debt ceiling, which may last for just a few months. And this is what happened in 2021 when a $480 billion increase was then followed a few months later by another $2.5 trillion increase. So realistically, it's going to be one of those options that we've just been through that's most likely to happen based on what they've done in the past. However, this doesn't mean a default isn't possible. Yes, it's unlikely, but it's definitely still possible. I mean, after all, we've been seeing politics in the US becoming more and more polarized over the years. In the past, it was the threat of the consequences that forced Congress to lift the debt ceiling, but brinksmanship is becoming more prevalent in politics, and we could see policymakers push beyond the limit. You never know, it could happen. Now, earlier this week, I spoke with the legendary trader Andy Krieger about his opinions on this situation. He always has a great fundamental view, and he's also witnessed this political shift taking place over time and thinks that it presents a greater risk this time than it has before.
You know, it used to be that the people in Congress would yell and scream and curse at each other, and then they go out and have dinner and play golf. I mean, they were friends. There actually is real rancor now. There really is. It's divided, and it's rancorous. It's not good. If one party or another thought that a default would help destroy the other party, they would go for it. That's the level of animosity and the level of self-interest.
And although unlikely, there are some more extreme options that can be taken as well. That includes invoking the 14th Amendment of the US Constitution. This states that validity of the public debt of the United States shall not be questioned. The law was created for the Civil War, but according to interpretation, at least on the government website, it also applies to government bonds issued after the amendment. So technically, President Biden could invoke this and bypass Congress altogether. But both Biden and Treasury Secretary Yellen have said that this could create a legal battle which may take time to settle, so it's not the desired option here. The Treasury may even take things further and begin to prioritise obligations. This was actually discussed during a 2011 FOMC meeting, which Yellen was involved in during her time at the Federal Reserve. And under this scenario, no Treasuries would be defaulted on. Instead, the Treasury would pay interest on them as they come due and then issue new securities of the same value as they mature. However, they would also need to hold back payments for other obligations, such as social benefits, to make sure they could pay the debt first. As you can imagine, the public isn't going to be too happy about this, and in particular, social benefits tend to play in favour of Democrats, so disrupting these would harm them politically, and there are elections coming up, so they're not going to want to do that. It could also cause longer-term irreparable damage, such as a shock to consumer confidence, which would ultimately harm the economy. The Treasury also has more extreme actions that they could take, although they are extremely unlikely.
Are they going to start printing $1 million bills? Are they going to start? I mean, there are lots of things that they could do really weird stuff. They could issue bonds at crazy yields, which would have massive interest rates over time, but not blow out the deficit because they could have a low face value. There are lots of things they can do. So minting coins didn't work so well for John Kennedy. So that's another discussion for a different day, right?
But let's say that they do get to a point where the US ends up defaulting. This was a scenario that people feared was possible just over a decade ago when Congress was stuck in deadlock then. They did eventually reach a deal, but it had some big impacts on the markets and the economy in the process. It created volatility in US equities. At the time, it was the most since the 2008 financial crisis. The credit rating of the US government was downgraded, theoretically meaning it would cost more for the US government to borrow money again. And it was estimated that this whole debt ceiling issue increased borrowing costs by $1.3 billion in just that 1 year.
If the US were to default on its debt, it would send shockwaves through the global financial system. It would affect every part of the global economy. Even if it's a short-term thing, it would still raise a lot of doubts. It would cause a lot of concerns about the US being the prime mover in the global system, that the dollar being still the global currency, if you will. Already, China, Brazil, Russia, they're trying to do more business in non-dollar currencies, whether it be commodity based or other, but still the US is still the global power. They are the hegemon.
Alongside that, many other things could go wrong as well, just like what we saw recently with the banking crisis, where higher interest rates led to the collapse of SVB, among others. But despite all of this commotion all of the time, it's still unlikely that the debt ceiling will be removed anytime soon. Politicians like to use it as political leverage to change the budget however they want and score political points over their rivals. Some have also argued that overall it does limit spending because the debates have led to concessions.
So I think in self-interest, they'll probably muddle along, reduce some spending programs, and come up with some awful negotiated settlement and compromise arrangement. There will be an effect from that, and there will be an impact, which will be there will be less government spending when this is all done.
But for now, let's just see what happens with the current negotiations. I'm sure, as usual, they'll take it right down to the wire before they end up lifting the ceiling or suspending it. But in the meantime, we'll have uncertainty. Don't be surprised if there are extreme headlines in the media, but hopefully they'll get there in the end. Thanks, as always, to Andy Krieger for sharing his views. And if you want more insights from Andy, one of the most successful traders of all time, you'll find a link in the description box to our collaboration project with him. And it's completely free to sign up. I encourage you to do so. You'll find out about his unique view on the markets and how he structures his trades around opportunities. And don't forget to hit the like button if you found this helpful or interesting. I'll see you in the next one.